CarMax is facing one of the biggest inventory crises in its history, and the numbers are staggering. Over 80,000 SUVs, hybrids, EVs, gas SUVs of every size are now flooding lots across the country, and insiders say this is the moment the market quietly broke. The flood didn't happen overnight. CarMax kept buying, automakers kept overbuilding, and buyers suddenly shifted their preferences all at once. Analysts first noticed something was wrong when SUV inventory started rising week after week despite price cuts. What looked like a temporary slowdown suddenly turned into a supply glut, big enough to crash resale values in every major region. And the biggest shock? Hybrids and EVs are now selling below dealer cost, something that almost never happens unless the market is collapsing. The crash in hybrid and EV pricing is being fueled by a mix of incentives, massive tax credits, and a wave of new models hitting the market faster than consumers can absorb them. Automakers spent the last 2 years overproducing hybrid SUVs and electric crossovers, expecting demand to keep growing. But instead, buyers hesitated. Suddenly, dealerships are staring at auction lots overflowing with unsold electrified models, with prices dropping so fast that CarMax can't adjust its retail listings quickly enough. At auctions, used EVs are hammering for thousands below book value, and hybrids, once the safest, most stable sellers, are falling right alongside them. Behind the scenes, the hidden data paints an even clearer picture of how extreme the inventory surge has become. Toyota RAV4s, Honda CR-Vs, Ford Escapes, Hyundai Tucson hybrids, Teslas, and even high-demand models like the Highlander and Pilot are clogging CarMax lots in numbers they've never seen before. Data analysts looking at mileage, trim levels, and regional pricing trends say consumers are finally rejecting the inflated SUV premiums that dominated the last 3 years. With real-world prices falling and buyers getting picky about mileage and features, values on even clean, low-mileage SUVs are suddenly collapsing. The demand that once kept SUVs moving smoothly has evaporated in just a few months. This is the moment the SUV bubble finally burst. Families are ditching oversized SUVs for cheaper sedans and small crossovers because monthly payments have become unmanageable. High interest rates are crushing large SUV financing, forcing shoppers to choose affordability over size. Add in unstable gas prices nudging households toward more fuel-efficient options, and the big SUV market is taking a massive hit. Dealers are now staring at metal they can't move unless they slash prices hard, and quietly, that's exactly what they're doing. Across the country, wholesalers are reporting backdoor deals where dealers offload SUVs to auctions at shockingly low bids just to get them off their books. CarMax, which once prided itself on paying fair market value, is now consistently buying below book because auction prices have fallen so fast. Wholesalers are scooping up units at record low bids and flipping them the same week because retail prices can't keep up with the freefall. The speed of this correction is unlike anything analysts have seen since 2008, and the EV and hybrid price war is making it even worse. Tesla's relentless price cuts have obliterated the used EV market. Every time Tesla adjusts pricing, the value of every used EV nationwide takes a hit. Toyota, Hyundai, Ford, everyone jumped into hybrids and electrified SUVs, expecting massive demand, and now they're stuck with more inventory than the market wants. And first-generation EVs? Buyers don't want them at all. Range loss, outdated tech, slow charging speeds, it's all pushing consumers away, leaving dealers scrambling to unload models that were future-proof only 2 years ago. Automakers are feeling the pressure and are already preparing for drastic measures. Production cuts are coming. Incentive wars for 2025 models are starting early, and rental companies are dumping aging SUVs into the market at a pace that's overwhelming both auctions and retail channels. The used SUV market is being flooded from every direction, and CarMax is stuck at the center of the storm. CarMax's financial hit is growing by the day. Holding costs are exploding with tens of thousands of units aging past 30, 60, and even 90 days. Aging inventory is death for used car margins, and CarMax knows it. They're now being forced to slash prices aggressively just to stop the bleeding. Every day, a vehicle sits on their lot. It costs them money. Storage, depreciation, financing, reconditioning, everything piles up. The longer they hold these 80,000 SUVs, the more they lose, and the faster they cut, the more the entire used car market feels the shockwaves. This crisis doesn't end with CarMax. Analysts say the entire used SUV market could drop another 20 to 30% if inventory trends continue. Dealers are quietly preparing for a brutal winter season, where slow traffic and high interest rates will make moving SUVs nearly impossible without massive discounts. But for buyers, this might be the best opportunity in years. The combination of falling prices, desperate dealers, and oversupply is creating a buyer's window unlike anything we've seen since the recession, and anyone waiting for a deal is about to get one as prices continue their downward slide. Buyers who were priced out of the market in 2021, 2022, and even early 2023 are suddenly finding themselves with leverage they haven't had in years. Negotiation power has flipped completely. Dealers who once refused to budge on price are now calling customers back, willing to knock off thousands just to clear aged units. And the shift isn't just happening at CarMax. AutoNation, Lithia, Penske, and independent franchise stores are all swimming in similar SUV surpluses. Analysts say the problem is that the entire industry bet too heavily on SUV demand, staying sky-high forever. And now, the reckoning is beginning. When automakers saw huge margins on SUVs during the pandemic years, they doubled down, converting factories, cutting sedan production, and pushing dealers to stock more high-margin utility vehicles. But the cost of living crisis, interest rate spikes, and fuel anxiety flipped consumer behavior almost overnight. The craziest part? Even popular models with strong reputations are collapsing in value. Toyota Highlanders that once sold within 48 hours now sit for months. Honda CR-Vs and RAV4 hybrids, once considered unbreakable value, are dropping thousands in a single week. Full-size SUVs like the Tahoe, Expedition, Telluride, and Palisade are seeing some of the sharpest declines because no one wants to take on $900 plus monthly payments anymore. And even used Teslas, which were once the hottest thing at CarMax, are piling up in back rows because buyers are either waiting for more price cuts or avoiding EVs entirely over charging infrastructure concerns. As inventory swells, the pressure on auction prices intensifies. Manheim's indices are showing some of the steepest month-over-month drops in over a decade, and that drop is flowing directly into the retail market. Cars that sold at auction for $29,000 6 months ago are now struggling to break $22,000. Dealers are openly admitting they're losing money on trades they bought earlier in the year because the floor fell out faster than anyone expected. Every expired 30-day cycle means another round of markdowns, and CarMax alone has hundreds of units crossing those thresholds daily. Their reconditioning centers are overwhelmed, their logistics costs are spiking, and their profit margins are evaporating. It's a slow-moving financial avalanche, and it's happening in real time. Meanwhile, automakers are scrambling to figure out how to stop the bleeding. Early reports show several brands quietly planning to pause SUV production weeks earlier than scheduled this winter, just to prevent inventory overruns. Incentives that were once rare are now returning. $3,000 cashback here, 0% financing specials there, and aggressive lease deals designed to force metal out of showrooms. The problem? Incentives on new SUVs make used ones even less appealing, which puts more pressure on CarMax and other retailers holding mountains of used inventory. It becomes a vicious cycle. New car deals kill used prices drop, dealers panic and dump units, auctions get flooded, and retail values crash again. Buyers watching from the sidelines are about to see deals that would have been unthinkable 2 years ago. Analysts say late-model hybrids could fall below compact sedan prices. 3-row SUVs might drop to pre-pandemic values. Some used EVs, especially first-gen models, might sell cheaper than motorcycles. But the industry is warning that this correction might not be smooth. A flood of low-value trades could send smaller dealers into financial trouble. Rental car companies might trigger another wave of supply dumping, and automakers could face shareholder pressure to reduce output even harder. If that happens, the used market could see even sharper swings as the system tries to rebalance itself. And all of this circles back to CarMax, standing right at the epicenter. Their business model relies on steady demand and consistent turnover. But with 80,000 SUVs sitting and tens of thousands more incoming from auctions, trade-ins, and lease returns, they're staring at a logistical nightmare. Their lots are packed, their transport lanes are jammed, their pricing algorithms are in overdrive, adjusting thousands of listings daily just to stay competitive. Every week costs them millions in depreciation, and every markdown echoes across the entire used car ecosystem. The market has shifted, and CarMax is learning that in a glut this big, even the giants can bleed. What makes this moment even more shocking is how quickly consumer psychology has changed. For years, buyers were conditioned to accept sky-high prices, limited inventory, and long wait lists. But now, with social media flooded with discount stories, auction data leaks, and dealer confessions, shoppers are suddenly refusing to overpay. They're waiting out the market, comparing nationwide listings, and walking away from deals that would have sold instantly just 2 years ago. And as customers slow their buying pace, inventory piles even higher, putting more pressure on retailers like CarMax to drop prices further. Every time buyers hold back, the market takes another step down, and it's creating a domino effect that no dealership chain, even one as massive as CarMax, can easily escape. Inside CarMax locations, employees are quietly acknowledging the shift. Salespeople report longer idle periods, more test drive-only customers, and a rising number of buyers coming in strictly to watch prices. Managers are increasingly approving deeper markdowns just to move aged stock, and internal messages are pushing staff to clear high-mileage units and older EVs before the winter slump kicks in. The company knows that November through February is always the slowest stretch for the used car business, and going into that season with bloated SUV inventory is a recipe for disaster. CarMax is preparing for a harsh reality. Whatever doesn't sell now will cost double to move later. Meanwhile, the logistics nightmare keeps getting worse. Transport trucks are arriving faster than vehicles are leaving the lots. Overflow yards are filling up, and in some regions, CarMax has started storing SUVs in off-site contracted spaces because the lots can't hold everything. Every vehicle sitting in those overflow yards adds transport costs, inspection costs, and storage fees, none of which help profitability. Vehicles aging past 90 days become a liability, not an asset. And CarMax is now staring at thousands upon thousands of those liabilities at once. This isn't just a sales problem. It's an operational crisis that affects every corner of the company's nationwide network. At the same time, the broader auto industry is quietly accepting that the SUV boom is over. High fuel prices and relentless inflation are forcing many families to rethink what they actually need. Compact sedans, hatchbacks, and small crossovers, the models automakers abandoned during the SUV gold rush, are suddenly desirable again. Buyers who once dreamed of owning a 3-row SUV are shifting to cheaper, simpler vehicles with better mileage and lower repair bills. This shift is pulling demand away from the very segment CarMax is drowning in. And as long as households continue prioritizing affordability over size, the imbalance will grow even worse. All of this drives a painful truth that dealers hate to admit. The used SUV market has been artificially inflated for years, and now the correction is finally happening. The rapid slowdown in sales is exposing just how overbuilt the segment really is. Automakers spent billions converting factories to produce more SUVs than the market needed. Dealers ordered aggressively because SUVs delivered bigger profits, and CarMax fed the machine by paying top dollar at auctions to keep up with demand. Now that demand has evaporated, the industry is stuck with a mountain of vehicles nobody wants at last year's prices. The bubble didn't just burst, it popped with such force that the shockwaves are spreading across the entire market. Even Wall Street is taking notice. Analysts watching CarMax's inventory data are warning that this level of oversupply can trigger multi-quarter financial losses. When inventory stagnates, cash flow slows, profits shrink, and operational expenses explode. Investors are already asking the tough questions. Will CarMax reduce buying? Will they close underperforming stores? Will they sell off inventory at a loss just to avoid deeper damage? The answers aren't clear yet, but one thing is certain. The company can't carry 80,000 depreciating SUVs into 2025 without taking heavy financial hits. Something has to give, and soon. And the craziest part? This is only the beginning. Lease returns from 2021 and 2022, the peak price years, are about to hit the market. Rental car companies are preparing their annual winter fleet dump. Automakers are launching major clearance incentives. All of that metal is heading straight toward the same used market already buckling under enormous pressure. If the market is flooded now, it's about to turn into a tidal wave. As this tidal wave approaches, dealers across the country are bracing for impact. The upcoming flood of lease returns is especially dangerous because these vehicles were originally priced during the height of the pandemic's inflated market. Monthly payments were sky-high, residual values were unrealistic, and automakers set aggressive future valuations based on the assumption that demand would remain historically strong. Now those leases are ending, and the cars coming back are worth far less than the values they were assigned. This means thousands of customers are walking away from their leases instead of buying them out, pushing even more nearly new SUVs, hybrids, and EVs straight into the wholesale market at the exact moment dealers can least afford more inventory. Rental giants like Hertz, Enterprise, Avis, and Budget are also quietly preparing massive fleet liquidations. Hertz's EV experiment backfired so badly that they're planning some of the biggest electric vehicle sell-offs in company history, and many of those cars ultimately end up at CarMax locations across the country. These rental units often come with higher mileage, heavy wear, and lower resale appeal, adding even more downward pressure on prices. When rental companies start dumping their fleets, it sends a shockwave through auctions. And every dealer in line behind them is forced to either lower prices or get stuck with vehicles nobody wants at inflated values. Meanwhile, consumers are becoming more informed than ever. Social media influencers, market analysts, and automotive insiders are posting daily updates showing price drops, auction results, and dealer markdowns. Buyers are watching videos that expose how fast SUV values are falling. They're waiting for the true bottom, holding off purchases until the perfect moment. This newfound consumer patience is stalling the market even more, giving inventory more time to age, lose value, and back up across dealership networks. The longer buyers wait, the more pressure dealers feel to reduce prices, and the cycle intensifies with every passing week. CarMax's leadership is reportedly scrambling behind closed doors to address the situation. Their pricing algorithms, once the backbone of their consistent nationwide pricing system, are struggling to keep up with the rapid depreciation happening in real time. When prices fall this fast, even automated models can lag behind the market. Vehicles that should be marked down by $1,500 are sometimes sitting unchanged for days, and by the time adjustments hit the website, competitors have already dropped lower. It's a race to the bottom, and CarMax is caught flat-footed, watching rivals adjust faster and lure away what few buyers are still left shopping. At the same time, CarMax's buying centers are being forced to tighten their offers dramatically. Customers hoping to trade in their SUVs are experiencing severe sticker shock. Vehicles they assumed were still worth $28,000 are now getting offers closer to $21,000. Many walk away confused or angry, not realizing just how brutal the wholesale market has become. But CarMax can't risk overpaying anymore. Every unit they buy too high becomes another aged loss leader sitting on the lot. Their margins are shrinking, their risk is growing, and their warehouses are filling up with inventory that's losing value by the week. This pressure is beginning to reshape the entire industry. Smaller used car dealers, the ones without nationwide support networks or massive credit lines, are in trouble. High floor plan interest rates are crushing their ability to hold inventory, and many are being forced to liquidate or shut down entirely. As they exit the market, even more vehicles get dumped into auctions at desperate prices, accelerating the downward spiral. It's a consolidation event. The strongest players survive, the weakest get wiped out. And CarMax, despite its size, isn't immune to the shockwaves rippling through the used SUV market. Industry veterans say they haven't seen a correction like this since the financial crisis. But this time, the collapse isn't driven by a housing meltdown or credit implosion. It's the result of a massive structural miscalculation. Automakers built too much. Dealers bought too aggressively. Consumers shifted too suddenly. And CarMax is caught holding more inventory than its entire network can realistically move in the near term. The stakes are enormous, and the clock is ticking as winter, the slowest, harshest selling season, approaches with tens of thousands of unsold SUVs still sitting in rows. Winter is always the season that exposes the weaknesses of the auto market, but this year, It's going to hit harder than anyone expected. Cold weather slows foot traffic, families tighten their budgets for the holidays, taxes and bills eat into disposable income, and big-ticket purchases get pushed into spring. For a dealer, winter inventory is a financial weight, but for a dealer carrying too much inventory, it becomes a crushing burden. CarMax is entering this winter with more SUVs, hybrids, and EVs than at any point in the last decade, and every one of those units has a ticking depreciation clock on it.